Oh, DocuSign, what has happened? The US international cloud-based software company famous for its electronic signing documentation software had been booming over COVID 2020 into early 21, and earnings out the other day and the price got smashed. So is this a time to buy the dip, especially with COVID-19 rearing its head again in its newest form, or is this really trouble for DocuSign? Well, in today's chart of the day, I'm going to have a look at the technical analysis to see what's going on and to see where they may be heading next. Hello, I'm Stephen Ho, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. From the weekly line chart of DocuSign, we can clearly see the growth from the start of the COVID pandemic in sort of February, March time of 2020. It was a bit of a bumpy ride up to new highs of nearly $320, and then as the latter part of this year sort of played out, the price came off from its highs, and then I said earnings Deck 3 weren't as expected, and the price plummeted on the actual day about 42%, and as you can see there, it's down 57% from its highs. Today it's just pausing around that 38.2% line, $141, so we might be seeing a bit of a consolidation after quite a dramatic sell-off. If it doesn't stop here, then it's down to just about $100 and then into the noisy range, less than 100 down to 36, where it was sort of pre-COVID-19 sort of kick off in, like say, Feb 2020. At the moment, if it can consolidate, it's got to get back up into about the $200, where there's a lot of that noisy price range between that and $250. But at the moment, not looking that great. If you are still bullish on DocuSign, where do you get back in? Well, the 4-line break chart here can give you some clues. Now, I've got an aggressive entry where I use a 4-line break plus a 2-bar reversal, and that gives us a $243 point entry. And if we're more conservative, we can use the 4-4 approach, then $253 also gives you a number in, and time that in with the stochastic indicator at the bottom there, moving up through like the 20 zone. Well, the trend had been steady over 2020-21, and as you can see on the price chart there and the daily Heikin-Ashi, that the price did behave within that 2 standard deviation regression trend band. That's the light salmon and light blue pink shaded areas, until really our earnings popped out the other day, and it has dropped quite dramatically outside of, like I say, that 2 standard deviation regression band, and all the indicators below that bearish volatility jumped massively from an average of about 53% to 267% per annum, and volume as well massively spiking, as you can see there. So at the moment, again, everything short term definitely bearish. Can it get back within that 2 standard deviation band? That's the question. That's got quite a lot of way to go, and with heightened competition and the landscape changing all the time for this type of company, then it might be tricky. It's looking a bit more promising on the Renko chart. $5 block size. Now all the signals at the moment are bearish, but they are warming up to the upside, and you can see the Renko blocks have just about turned bullish at the moment, but they are a long way under their longer term moving average, and they're a long way under the 2 pink line box breakout system there as well. So it's got some work to do to get to the upside. Now downside numbers, if it fails here, 104, 105 next stop down, and then under that it's into, like I say, that big zone down to about $40. Upside wise, next serious target is about $200 to 210. Then it's into a lot of the previous noise around the 250s, and then if it can, it's $300, $310 back to those highs before it can even think about going any higher. But at the moment it's, like I say, overall not great, and the Renko chart at the moment is definitely not buying at this precise time because the signals aren't there. So like I say, if you're bullish, sit and wait, sit on those hands and wait till the signals give you the entry in. In the short term there might be some bullish upside, buying that dip opportunity, very hit and run type trades, but overall we look at the bigger picture, then it is all quite bearish, and DOCUSIGN get the bearish score in chart of the day. And if we go up to the top right, if you are bullish and you want to look for those opportunities, then there's some numbers there for you to get in at 243 and 253. And again, also focusing on the targets. If you're bullish, with a bit more aggressive intent, then entry around the 156 area could be for you, with possible upsides then of 1.57 and 3.36 to 1. Downsides still looking slightly more favourable, getting in around 132 zone, giving you a risk return on a more aggressive trade of 1.83 and 3.57 to 1. But overall at the moment it's still very bearish. The fundamentals aren't great at the moment. There's a few legal goings on as well behind the scenes there, but they have been doing partnerships with companies like Salesforce, so some positivity there. But the technicals also not looking very good. Yes, I think there could be some short term hit and run by the dip trades at the moment, but based purely on the technicals it's got to be bearish, I'm afraid. Let me know in those comments below what you think of DOCUSIGN, where they might be heading next. And if you've liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content such as this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.